Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
The world of tech and communication services has been on a roll for years, with many experts predicting that these sectors will continue to drive economic growth in the future. But what if I told you that even giants like Apple and Alphabet aren't immune to a little market volatility? That's right, folks. The narrative that technology and communication services are always at the forefront of market rallies is starting to show some cracks. Now, let's take a closer look at why this might be happening. Preliminary reports indicate that both information technology and communication services experienced modest declines today, with the former down 1.14% and the latter dipping by 0.52%. But don't worry, this doesn't mean their overarching influence has waned. In fact, these sectors collectively represent a colossal portion of the S&P 500, with information technology alone accounting for approximately 34% and communication services holding around 10.41%. This significant market weighting means that even slight movements in these sectors have a disproportionate impact on the broader index. So, what's driving their dominance? Well, it's no secret that relentless innovation, secular growth trends, and their indispensable role in the modern economy are all contributing factors. And let's not forget about artificial intelligence, which continues to fuel demand across various subsectors. Companies involved in AI infrastructure, data centers, and advanced computing solutions are experiencing unprecedented growth. Take Micron Technology, for example. They recently reported strong fiscal fourth quarter results, explicitly crediting robust AI-related demand for their performance. Now, beyond AI, the continuous evolution of digital platforms, cloud computing, 5G technology, and the increasing global interconnectedness further solidify these sectors' growth trajectories. These advancements are not merely incremental. They represent fundamental shifts in how businesses operate and consumers interact, ensuring a sustained pipeline of investment and development. The timeline leading up to this moment has been characterized by aggressive capital expenditure in R&D, strategic acquisitions, and a global race for technological supremacy, all contributing to their elevated market valuations and investor confidence. But what about the landscape of winners and losers within these sectors? Well, it's constantly shifting, primarily driven by innovation cycles and market adoption. Companies at the forefront of AI development and deployment, such as NVIDIA, continue to be significant beneficiaries. Their GPUs are foundational to AI training and inference, making them critical infrastructure providers. Similarly, cloud computing giants like Amazon with Amazon Web Services and Microsoft with Azure are perpetual winners, as digital transformation continues to drive demand for scalable, on-demand computing resources. On the communications services front, companies that effectively leverage data, enhance user engagement, and expand their digital advertising footprints tend to thrive. Take Meta Platforms and Alphabet, for instance. However, today's minor declines for some of these giants underscore a broader market sensitivity. Even dominant players can experience short-term pressure from macroeconomic concerns, interest rate expectations, or specific company news. Smaller, less diversified tech companies or those with less clear pathways to AI integration might face challenges, and that ripple effect extends to traditional industries. The sustained dominance of the technology and communication services sectors carries wider significance for global financial markets. Their substantial weighting in indices like the S&P 500 creates a phenomenon of market concentration risk, where these globally scaled companies represent a smaller slice of the U.S. GDP compared to their index weight. While they've been incredible growth engines, their outsized influence means that the overall market's performance can become heavily reliant on a relatively small number of megacap stocks. Furthermore, these sectors are particularly sensitive to shifts in interest rates and inflation expectations. Growth stocks, which characterize much of the tech and communication space, often see their future earnings discounted more heavily in a higher interest rate environment. Regulatory scrutiny is also growing, with governments worldwide examining issues related to antitrust, data privacy, and content moderation. Looking ahead, the technology and communication services sectors are poised for continued evolution, presenting both significant opportunities and strategic challenges. Companies will need to demonstrate resilience and clear pathways to profitability amidst tighter capital conditions. The ongoing integration and commercialization of AI will remain a primary growth driver. In fact, long-term possibilities include the expansion into new frontiers like quantum computing, advanced robotics, and immersive virtual realities, the metaverse. These areas hold the potential for the next wave of disruptive growth. For investors, the challenge lies in discerning genuine innovation from speculative hype. So, what can we take away from today's modest declines? Well, it serves as a timely reminder that even market leaders are not immune to daily fluctuations. However, it doesn't fundamentally alter the long-term outlook for these crucial sectors, which is still driven by their unparalleled capacity for innovation, fueled by secular trends like AI. That's right, folks, Quorra here. And when it comes to tech and communication services, I'll be keeping a close eye on what's driving growth. The key takeaway remains their immense potential for innovation, underpinned by fundamental drivers like AI, cloud computing, and digital transformation. These sectors are the engine of modern economic growth, and their performance will continue to shape the overall market direction. So stay informed, folks, and I'll see you in the next video on Quorra.